Hello and welcome to My Finance Teacher. Today is 30th of May 2018 and I hope you guys are having a nice day. Today I want to talk about long-term perspective for gold price and why do I think that in the year 2021 the gold price might actually be 2021 as well, bringing us to new all-time highs. To support my argument, first of all I want to compare the gold price, you see the chart in front of you, with the cost of mining gold. Here we have some data from CPM Gold Yearbook for 2018 and it looks like over the last several years all-in sustaining costs of mining gold have been anywhere between $900 and $950 per ounce. Now looking at the price, what happened to price? Actually, in late 2015, price dipped all the way down to just under $1,050. That would tell you that it's only about $100 above all-in sustaining costs of gold. What it means, it doesn't actually include all costs of mining. So on the first glance you might think that the margins for companies were quite small. In reality, it's quite possible there were no margins at all. This is because all-in sustaining cost of gold only include the costs that would be relevant in case if the miner maintains current production output. However, if output is to increase, and it is with expectation of higher prices, we see that miners do expect higher prices because the costs of production have been rising since, well, that's sort of mid of 2016. After the miners saw that in 2016 there was a nice rally in gold, of course they're increasing their production costs, and that is done by adding higher cost grades into production. That is possible with this rising price of gold. Actually, over the last 2.5 years the price of gold rose by about, say, 30% or so. So anyway, back to all-in sustaining cost of gold's cost of mining versus all-in cost of mining. That would actually include additional costs relevant to expanded production. And you know what? Even the all-in costs of gold does not include some other cost items such as, well, taxes, for example, and financing costs. Let's say, for example, interest on any debt that a miner would have. So what it tells you is this number, the cost of producing gold, is actually, well, quite higher, and it's very likely that in late 2015 the price of gold was at least tangent to all-in inclusive cost of gold, or even dipped slightly below the all-in cost of gold. So what it means that it's highly unlikely for the price to go any lower than that. That would destroy a lot of the miners, creating shortages of gold, and of course bumping the price back up. So it's highly unlikely that price of gold would dip any lower than that, meaning that this bear market that we saw since middle of 2011 actually finished in late 2015, and we are now in a new, well, sort of a new bull market. It's not really new anymore. We've been going on within this bull market for 2.5 years already, but we are in a bull market, and upward trend for gold prices is going to continue. Now, why do I think we might reach 2021 by 2021? For that, I want to show you another statistic by Fraser University. That is basically worldwide gold projects at different stages of either exploration or development and production. Of course, over the last several years, since gold price rallied since late 2015, companies have been investing more into exploration. So we have a lot of new projects at these stages, and it takes several years. This stage, the exploration stage, of course, takes several years. What we see after that, during the stages, in the stages of development, which also takes several years, there are virtually no projects. There are very few projects. And the reason for that is, of course, this bear market. During the bear market, the companies did not invest much in exploration, which means by now there are not many projects at the stages of development. And these, again, these stages take several years, which means that over the next several years there isn't going to be much addition to current levels of production, plus some of the mines might actually run out of gold over the next, well, let's say several years. So all that means is, what that means is that supply of gold over the next, I keep saying that, but again, several years, is rather limited. And with price increase becoming more noticeable by different types of investors, demand for gold is going to increase once price sort of breaks above, once the price breaks above 1500 or so. I expect a lot of investors piling back into gold and creating sort of a rocket launch all the way up to new all-time highs. For that reason, actually, I think that 2021, by 2021 is actually a very conservative forecast. But anyway, I'm interested in your opinion. Share your opinion in the comments, subscribe to the channel, and hit the like button. I would appreciate that. Thanks a lot.